The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 30 January 2026. I'm going to do something a little different, even though the gold and silver markets got smashed heavily. I'll be addressing that in the February issue of the Morgan Report that comes out in a couple of days over the weekend. This is Friday, as I just said. There's always been this controversy about, is the market manipulated and is it not? And on it goes. I've posted a few articles on X and LinkedIn stating my position with all the fines that have taken place, people going to jail. The biggest fine ever that I'm aware of with JP Morgan, I think it was $920 million, almost $1 billion. But I brought something up that I've held hard copy for years. And when I read this, you will understand in context how long ago this was. And I want to let people know before I read this letter to me that I verified it with 2 floor traders. So this isn't coming from, this verification is coming from people who were there. Maybe not at this exact same time, but I think both cases. One was Vince Lancy. I think his handle's VPL's Ghost, and I forget the exact but you can find him if you search. And Vince is pretty well known in the sector now. Did options, did futures, the real deal, no nonsense, respect him greatly. The other gentleman, I'm just holding back on his name because I spoke to him and just wanted to remain anonymous, may come out later. So I verified this, I vetted this, and I'm just going to read it because it kind of tells the story, verification of what I wrote on a Kitco post years and years ago of how the market actually works. And let me state before I start reading that I've always maintained that the long-term trend cannot be manipulated. So there's that. I've also said that within the main trend, it certainly can be, and I like the word managed. So anyway, here we go. This came again. You'll figure it out when I read the numbers, how long ago this was. Dear Mr. Morgan, I enjoyed your newsletter excerpt of February 12th, which I found on the Kitco website. You stated perfectly some key reasons for silver's problems in getting out of its own way, and your call for further weakness was prescient. I guess I'm part of the problem. I've traded COMEX futures actively from the pit for over 15 years. Over the years, the amount of futures contracts that we've traded has surely dwarfed the actual physical market, making it difficult for silver to manifest its true fundamentals. As you alluded, it's Groundhog Day again on the floor. Over the past month, I watched one fund accumulate an eye-popping long position, and I followed its progress as best I could through the open interest and commitment figures. When prices started dipping away from last week's test of the 485 to 490 level, I could hardly believe my eyes when I saw early evidence that this fund was starting to sell. I went across the pit to a trader whom I knew was trying to stick with his longs, and I said, I've got news for you. That selling you see over there, that's going to take 3 weeks. The fund sold heavily all week. The usual bank traders were sopping it up, secretly relieved, I think, that prices had failed to break into ground they could not control. Younger traders asked me how these funds keep getting chopped up like this. They don't realize that a 30-cent chop in silver is a minor inconvenience compared to the strong positions these funds have in gold and crude. As you know, the banks will continue to play puppet master as long as the silver game remains quote-unquote closed. The banks know the upper parameters of the fund's buying power. The banks know when the funds have reversed themselves into an untenable short position. It will take new players to get the Bill Murray silver market out of this loop. Certainly, investment demand is the wild card that banks and recurrent short sellers cannot control. Silver will be called lower on Tuesday morning, and although I'm a bull, I'm getting short on the bell. There is no short-term success in getting in the fund's way. Thank you again for your insight, a COMEX floor trader. Again, I vetted that with Vince Lansing, another floor trader. You can make with it as you will. And I'm making this short. I'm writing a report, as I just said earlier. But the game has changed. I have said, many others have said, there will be a day when the physical market takes control over the paper paradigm. And today's move down obviously was in the derivatives. Nothing fundamental has changed. And obviously there's still power in the paper paradigm. But as far as ultimate control, it is the physical market. You can't put a piece of paper into a solar panel. So I think that we're still in the final phase of a major bull market, and that it's still a bull market. We have not seen the top yet. Market knows more than I'll certainly state that. And I'll just leave it at that for now. I think, remarking on the letter a little bit, that some of these shorts are probably very, very relieved to be able to exit their short position and maybe curtail their positions and close them out. And I'll just say, quote unquote, good for them. But the market, again, I think has got further to go to the upside. And these kind of moves down usually take some fair amount of time to consolidate, rebuild a base, and move back up. But we've seen such strong demand physically out of China that perhaps it won't take that long. Time will tell. I'm going to close out. I'm showing you our landing page. Step 1 is to get on our free email list. Step 2 is to watch the documentaries. One is the Four Horsemen. The other one is the one I funded called silversunrise.tv. And the last is guidance on if you want to get involved with the subscription service. So I'll leave it at that. Wishing everyone a great weekend. And I'll be back next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't